cold weather and high oil prices have pushed up energy prices this month. Oil prices climbed to 9-month highs in February, pulling electricity and gas prices up with them. However, gains in power contracts were limited by further falls in carbon prices. Annual gas and electricity prices began to pick up over the month, and they are now close to levels seen in September 2012. The main driver of the increase has been the surge in international oil prices. Month-ahead Brent crude increased 4% to a monthly average of $116.40 a barrel, as OPEC lifted its oil demand growth outlook for 2013 as a result of renewed economic optimism. As a consequence, the annual gas contract rose 2.1% to a monthly average of 67.6 pence per therm. The annual gas price has climbed 10% since July, but it is still down 1% on last year. Electricity was more muted. The annual April 2013 electricity contract climbed 0.7% month-on-month to average £51.80 per megawatt. But the annual power contract is still 3% lower than this time last year, but carbon prices tumbled even further, following continued uncertainty about EU measures to increase the price of emissions by withholding allowances from the market. Annual carbon dropped 15% to a monthly average of €4.70 per tonne. January saw the UK gripped by freezing temperatures, which drove short-term electricity and gas prices up to 11-month highs. The weather over February was, as forecast, just as cold. As a result, day-ahead electricity and gas prices reached yearly highs. Day-ahead electricity prices climbed over 2% to average £51.22 per megawatt and reaching £58 per megawatt on the 25th of February. Day-ahead gas increased similarly to a monthly average of 68.4 pence per therm as a result of low gas storage levels and colder weather. The UK's most important gas storage site, Rough, is now just over a third full after extensive use during the recent colder weather. UK gas storage has been working flat out as a result of low LNG imports. If there is another sustained spell of cold weather, prices could increase significantly. Furthermore, around 5 gigawatts of old fossil fuel plant is expected to close in March, which could tighten electricity supply and lead to higher prices. OPEC and the International Energy Agency recently published their latest oil market reports, but they told different stories. OPEC predicted an increase in oil demand growth over the year as a result of signs of global economic recovery and colder weather. In contrast, the International Energy Agency downgraded its oil demand growth forecast, reflecting more subdued economic activity. For more information and the latest energy prices, visit www.catalyst-commercial.co.uk.